Hey everybody, and welcome back to my channel. In this video, I'm going to share with you a trade recap of a trade that I took day trading Forex focusing on pound yen. For this trade, I actually took two positions. I'm going to show you the entire strategy step by step. It was taken during the New York session and my intention was to trade during a very small 2-hour window. This is pretty much the only time I managed to day trade, as I am a full-time mother as well. It goes to show that you can still day trade along other commitments. Before we get into the main content, I have 2 points I want to share with you. First of all, just in case you missed it, I have recently launched Mind Over Markets. It's a free email course. It's a 5-day email sequence. This free course will help you to develop an edge on the markets that comes from your mindset and your trading psychology. So if you're not enrolled, check it out. There is a link below in the description. Secondly, I have a favor to ask you. And no, it's not just to like and subscribe to the channel, but by all means, please go ahead and do that now. I'm really interested in learning more about you. Yes, you who are sitting there watching me talk now. I'm going to give you 4 different scenarios, and I would love for you to comment below and tell me which one fits you best. Are you A, complete beginner trader who is looking to start right at the beginning and wants to learn all the basics about how to trade? Are you B, a trader who knows the basics but who wants to learn more, in particular about strategies? C, are you a trader who can trade and who can make money trading, but you struggle with the trading psychology and the emotional reactivity that goes with trading? Or are you D, you are simply here for entertainment, to see how I am progressing with my journey, and you don't really want anything at all, just a bit of community? If more than one fits you, please comment below whether you are A, B, C, or D. I'd love to learn more about you. Once you've done that, let's get into the main content. Okay guys, before I jump onto the charts and go through my pound yen day trade in full detail step by step, you may notice I am already in a couple of positions here. I've just entered into a position on pound dollar, which I think is making a very interesting turn. So let's have a very quick look at that first. If you watch my channel, you'll know that I mainly day trade pound dollar. It's quite rare that I go away from this pair. But this week I haven't actually traded pound dollar because I feel like it's been in a strange place. Let me show you what I mean. Monday we kind of opened up here and we had this very big gap down, a very big drop. But Tuesday we bounced up, closing this gap, and went above it, peaked above there. But Wednesday and Thursday we just didn't trade any higher. It's kind of in this unpredictable consolidation phase. And if you zoom out, I'm on the 15-minute time frame here, so you can even get more clarity if we drop to a faster time frame. Let's look at the hour. It almost looks like it's making an upside down cup and handle pattern. Do you see this? Price is coming up, and I can't really do a circle very well, but you get the gist that we've kind of come down, pushed up. Look, it's a cup and a handle, but the handle hasn't broken the base of the cup, and I'm pretty confident this is going to drop down. I've got this area drawn here from the daily chart, which I think it may have the potential to drop to. So I have set this in another account. This isn't in my account with the 5%ers, who I'll talk more about later. I've set this in my live account because I've kind of just leaving this to run as an experiment, really, to see if I can get a nice win. Usually I have a very strict trading plan. I day trade, I'm in and I'm out to reduce my exposure risk. So I aim for smaller targets, but hey, wouldn't that be nice if I could get a 17R win on this trade? I'll keep you updated. Meanwhile, I'm going to talk you through my process for day trading pound yen on Tuesday. First step is always to check the news. I like to use forexfactory.com. It's a free, brilliant resource specifically for trading Forex. If you want to trade stocks, there are loads of other resources out there that you can refer to, such as Benzinger and MarketWatch. From the homepage on Forex Factory, if you click on calendar, it will usually show you any of the high impact news events due out this week, and you can filter it up here by ticking which one you want to see and which currency. So although we've had a lot of major news out for the dollar this week, I just haven't really seen any strong trends forming, which is why on Tuesday I was looking to pound yen. We had the major news release due out for the pound in the morning. There was nothing out for the yen. Going back to TradingView to my charts, this is what I could see Tuesday morning for pound yen. I say morning, for me, this was around about 1:30 in the afternoon GMT, day trading the New York session. And I pretty much go from 1:30 because that's when any high impact news is usually released. I like to wait for the dust to settle and then try and pick a trade just after that. Which, of course, if you are in other parts of the world, will probably be a different time. So it's always good to check what time zone you are in. The way that I found this trade pretty much was using one indicator, and that is the previous daily high and the previous daily low. The light blue line shows the high of the previous day and the dark blue line shows the low of the previous day. And as per my trend continuation, my breakout strategy, I'm looking for a cross and a close above or below one of these levels. So after 1:30, the news was released. I was scrolling through my watch list here, looking at the major currency pairs. Again, I looked at pound dollar, there was nothing there. There was nothing really for anything other than pound yen because we had a break above here and a close. And more importantly, it broke above, which was in line with this overall trend, which is up. These are all the points that make this an A quality trade. And what I love about this strategy is it's so simple, you can even use it on just one time frame. Great if you are very busy and pushed for time. So once we had a close above the previous daily high, where's the best place to get in long? Surely buying at the top doesn't make sense because we don't want to just be long right at the top of the move. Of course not. So to find out the best place for an entry, I first of all looked at intraday price action. Let's do it together. I'm going to make the candlesticks very large and I'm just going to use a drawing tool. So we can start from the current daily open, which was right here. And all I'm doing is looking at the most obvious peaks, the swings. So price pushes up, it comes down, pushes up, it doesn't break this high, it comes all the way down. So from the open, we have been down, we've been pulling back. But during the Asian session, we just started to get this very slow grind upwards. See how we're pushing up, building momentum. A little pressure cooker is building a lot of pressure here, a lot of momentum, so that when we finally push above these peaks, we're pushing up with some momentum. A little pullback here and another push up. So this is just a nice price action pattern to show that we've already tested the lows and now we've pushed above the highs. And it further validates the idea for going long. And I'm going to mark the obvious points once again. So this would be an obvious point. When we broke above this level here, we came up here. So this made a new high of the day, breaking this swing. Price then pulled back down to this level here. See how we got a lot of consolidation? The bodies didn't close below this level, and it was from this level here that we got the strong push up. So it was from this level, the most recent low, the authority here, that I used my Fibonacci retracement tool from, using it from the bottom of the bodies only and dropping it at the high of the bodies, the open of this candlestick here. And this gives me these three lines. These are the lines that I like to use on my Fibonacci. Everybody uses Fibonacci retracement differently. I like to use these. They are the optimum trade entry, the 60%, 70% and 79% levels. And it is at these levels that I decided to set an order for a long. I've been trading with the prop firm, the 5%ers, for some time now. As a prop firm, they are a great option if you want to trade a larger capital, where you can trade one of their account sizes and you both take a share of any profits that are made. But they don't stop there. As well as offering account sizes for trading, they also offer these extra features, including live trading room, free webinars and workshops, and one-on-one performance coaching. They have 3 different programs that they offer to traders: the Hypergrowth, High Stakes and Bootcamp program. I'm currently funded with the Hypergrowth program, so I am trading that live account with the 5%ers and taking a split of profits that are made. And I'm currently enrolled in the High Stakes program challenge as well. And my favorite feature of the programs that the 5%ers offer that differ from any other prop firm out there is the fact that they have removed the time limit, which means that you have an unlimited amount of time to pass the program. This is a massive game changer and it can really help you to avoid falling into a stressful situation when you are trading. Let's face it, trading can be stressful enough. If you want some more information or if you're ready to have a go for yourself, do check out the link below in the description. Before I set my order in the live market, I'm going to use this really useful forecasting tool on TradingView to calculate what my stop and target would be. I never get into a trade straight away. I always get in once I know where my stop loss order will be and where my take profit order will be, because they are the safety net of your trade to stop it from going against you and potentially racking up a huge loss. And they are the point at which you get out of the markets, avoiding you to slip into greed, which could also end up with a big loss. They're really important. So my entry was set just above this area here. I set an entry at 195.70. I used a larger 30 pip stop for this trade because it put the stop very neatly under this consolidation. And I rarely use 30 pips for a stop, but with a pound yen pair, I find that can be a lot more choppy and it can get a lot more range. So it felt like it made sense to use a wider stop. And my target, I was looking for a break of the high, and I always have at least a 1.5R target so that I'm always making more than what I'm losing. So I set a 1.5R target. This was set at 2 o'clock after that 4-hour candle close. The 4-hour candlestick also confirmed my bias to get in for a long. And price came down and it pretty much triggered me in straight away. We had a little retest of this area. It came down some more, got a little bit nervous at that point, started to question my theory, my trade. But there are techniques you can do when you slip into that space so you don't react emotionally, such as deep breathing, stepping away from the computer. I talk about it more in my free course, Mind Over Markets. There's a link below in the description if you want some more information. As we started to curve up here, this is where I decided to double up my position. So I set another buy order, exactly the same point, 195.20, stop the same. But for this target, I actually set a larger target to try to get more profit. It triggered me into my second position, so I am in 2 positions, pound yen long. And at this point, especially as we got this push up, I set an alert at the high here, my target. I set an alert at the stop and I walked away so that I would know if I got a loss or a win from this trade. And to be honest with you, that is pretty much the amount of time that I managed to get on the charts because I'm super busy at home. But price pushed up, it triggered the target for my first trade. So I made 1.5R on that. And then it pushed up some more. Now, once I got the alert go off for that first target, I then set another alert down here at the whole dollar, 1.96, retesting this level here because I was pretty much expecting it to come down. So this time I'm managing this trade from my phone pretty much while I was cooking tea. Price came down, it triggered me in. So I'm kind of cooking, looking at my phone every now and again, just monitoring this trade, wondering whether I need to be doing anything. Do I need to get out early? Do I need to leave it? As price pushes up here, another alert goes off at the high of the day because it broke the high of the day. Once it broke the high of the day, I trailed a profit stop to that whole dollar area at 1.96. Why? Because it broke the high of the day. I'm pretty much expecting this strong bullish momentum to continue upwards. And because it's getting towards the evening now, we're either going to see that trend gradually continue up or it's going to just fail and come down quite drastically. And if that happened, I didn't want to lose anything from my second position. So I set a tighter profit stop here at the whole dollar. I also set my alert here and I had a further alert higher up. And then I pretty much could enjoy my tea because I knew that either way I was going to win this trade. And just moving time on here, you can see that the new day started and price did come down and it stopped me out. So I got out of the second position with a smaller profit of 1R. Not the best profit loss ratio, but it is a way that you can manage a trade to try to let it run, but whilst also keeping some profits. And on this occasion, unfortunately, it didn't run very far, so I ended up getting out with a smaller profit. But if you just watch now, as the following day continues, if I had just left that, it would have come all the way down and stopped me out anyway. So I'd like to think that's an example of good trade management. Everybody is so different when it comes to managing their trades. There's so many different ways that you can trade, and each component of trading has its own methods. It's what makes trading so difficult, because there is no simple how-to guide. It's such a personal experience. It's such a personal journey. And I think it's something that you are constantly evolving with over time, because you are constantly learning. Every trade you take is a new experience, is a new learning journey. I'm learning from this, so I could learn from this, whether or not if I double up to just aim for the same target. There are so many different ways to trade. But as you can see, it is quite simple to just get in and out of a trade in a small portion of the day. You don't need to be at a computer all day to trade. If you are busy, like myself, with busy family commitments, or maybe you are busy because you have a job, a full-time job, anything that makes it difficult for you to day trade, it doesn't have to dominate your entire day. If you feel like you've learned something from this video, or you want to share something from your own trading journey, do comment below. Meanwhile, if you've enjoyed it, please drop me a like. It really helps me to grow my channel. And don't forget to subscribe if you're not already part of the channel. And I'll catch you in my next video. Thanks for watching. Bye.